What's going on, guys? Let's talk a little bit about how to trade the higher time frames when it comes to supply and demand. So what I'm going to start off looking at is the NQ 4-hour chart. It's going to be very, very simple, right? It's all going to really come down to what is your risk management once you're inside the trade, and how well do you manage your trade, which is going to determine how profitable or how much you lose. So very quickly, if we just kind of look at the 4-hour chart, and I'm just going to kind of go back, 2-3 weeks worth of data. And all I'm going to do is take the low points, take the high points, kind of see where did we stall, where did we kind of top out at, and then I'm going to go ahead and draw some trend lines. So basically what we're going to do is I got a little bit of support here. I've got a little bit of supply here. I've got a top here, right? Top here. I've got some more structure and more resistance here. Okay, so very quickly, you guys are going to see how well and how fast you guys can go ahead and draw out your supply and demand on a larger time frame and utilize this to be able to trade. And then basically, once we have all of these supply and demand zones, what we're looking for essentially, guys, is a lot of consolidation, a lot of supply. So a lot of support, a lot of resistance, and those are the levels that we're going to play in between. So then once we have these levels, we're going to simply go down to the smaller time frames, and we're going to then look at the 1-hour chart, right? So from the 4-hour to the 1-hour chart, we're going to kind of zoom in a little bit and see if we missed anything. Look at this little bit of support that we missed here, right? So we've got another little bit of support zone there. We've got that high there. We've got that low there. That all looks good. We're going to come down to the 15-minute. It's going to kind of match up. We've got a little bit of resistance here on a 15-minute chart. Now that we're all said and done, guys, what we're going to do is go down to the 5-minute, 2-minute, or 1-minute, depending on how much risk you want to play. And you can see that you have all of your zones kind of marked out. So some of the levels that I'll be looking for to go long on the NQ would be 15,939. We break that, put in a high. I need that new high to get confirmed. That's my long position. Give yourself 25 points, 35 points worth of risk, and manage how many contracts you want to play from there. We've got the high that we might want to be shorting here at around 16,050. So if we break this area, can't fail and fail to confirm and then start to roll back down, I'll give myself anywhere between 25 and 35 points worth of risk. And then I'll take that trade to play back down into the short side here, which is going to be into this 15,939. If we do break the 15,795, we wait for it to break, wait for it to consolidate, and then confirm, and then we can play that down into 15,640. So you can see how you can start to build out your supply and demand. All you need to basically do from here is distinguish how much risk do you actually want to put on the table, meaning if you want to lose only $100, you can only probably play one micro contract. If you want to lose $250, $350, $500, you can trade a little bit more size. But what I'm trying to tell you is it's not about trying to make $1,000 a trade. It's about trying to identify some of the levels. It's about risk management. How many points do you want to lose? Is it 10? Is it 15? Is it 20? That is going to kind of tell you and determine whether or not you can actually take the trade, right? If you have like 100-point kind of zone in between supply and demand, you're probably not going to be able to play 5 contracts, right? Maybe we can only play 2, because even at 100-point loss, right? If we lose that whole 100 points on that whole zone, one micro contract is going to be $200. 2 micro contracts is going to be $400. But we're also going to be trying to target somewhere between 50, 75, and 100 points, which essentially could mean that we're looking to make $200, $300 on that potential trade as well. So again, it's not really about the strategy. It's not really about tight stops, but it's more so about the risk management, how many contracts you're putting on the table, and how much room can you allow that trade to work against you before you either have to take that loss or take your profits. Then from there, what you want to do is figure out that equation on, if I lose X amount of trades, how long is it going to take before I lose my prop firm account? Then that number you're going to need to see, if it's 15 trades, is it 10 trades, is it 25 trades, is it 30 trades? From there, you can now start to play the probability game, and instead of trying to make every trade a winner, you can look at it in blocks of 20 trades, or 1 week, or every 2 weeks, or even every month. And then from there, scale the amount of funded accounts that you have in order to kind of take you to that next level. If you guys want more information, you guys want to trade with me, you want to build out a plan like this specific to you, you also want to trade on the live webinar with the rest of the team and get access to the courses, I got 1 spot left to join Evolution Traders. That link is down in the description box below. Enjoy your weekend. Good luck trading, and I'll see all of you guys on the next video.